So, welcome to another one of our budget webinars where we discuss some of the impacts of the budget on various areas of tax. The focus of this one is going to be really looking at individuals, personal income tax, capital gains tax, and some of the little bits and pieces around that. I mean, with regards to personal income tax, obviously one of the big manifestos from the campaign, and since Labour have got in, is that they didn't want to change the rates of tax for the working person. So really, not too much has changed. Perhaps you could just talk us through some of the rates bands and what's going to happen.
So I think the sort of all the main rates and bands, the personal allowance, the various bands where we pay tax, have been confirmed as being frozen until 2028. Which I think was actually in place from the previous government. So they stay. Well,
there was a lot of concern that she was going to extend it to like 2030 or something like that. The fact that she's keeping it at 2028.
And then from that point, they'll be rising in line with
CPI inflation.
So that's, I think we've got to accept that a frozen rate is really a tax increase.
Yeah, frozen bands. It's the fiscal drag.
Yeah.
Effectively, what we've seen with inflation in recent times, the fact that the personal allowance hasn't changed in the last 3 or 4 years, where we've seen the inflation rates and pay rises, more and more people are paying tax than they would have been.
Yeah.
And equally, more and more people have been dragged into a higher rate than they would have been.
Yeah. Income tax, they've pretty much left alone. But what about capital gains tax? They've not left that one alone.
No. So capital gains tax has increased across the board. So they've aligned capital gains tax rates with what was being charged for residential capital gains. So from the 30th of October, capital gains tax is now either 18% for the lower rate and 24% for the higher rate. And then also business asset disposal relief. So if you're selling an asset that qualifies for that, be it a property that's used within a company, or any form of kind of business asset that's subject to capital gains, shares, for example, that has remained. There was a lot of talk that might be removed, a lot of subjection as to would that be removed and replaced with like an old tapering rate that we used to have. But she hasn't done that. That's stayed as it is for the rest of this tax year. So you've still got £1 million per person lifetime allowance where you will pay capital gains tax at a rate of 10% on any gains that happen in this tax year. From the start of the new tax year, the rate will be increased to 14%, and then it goes up to 18% from April 2026.
So sort of phase it, matching it back to the lowest rate again, but in a more phased way. One clever thing she did is she'd spotted that investors relief and BADRA weren't aligned, in that you still got 10 million for investors relief. From effect from budget day, she brought that down to the million to
down to £1 million again.
I think that was perhaps just an oversight previously that she's spotted, hasn't
she?
And
it will again, the rates again will increase and align with how business asset disposal relief works as well. So there is still planning opportunities there, particularly now as we sit today. The benefit of business asset disposal relief until the 5th of April is 14%. Yeah. You are going to be saving tax at 14% rather than at 10% as it was previously. And then obviously the next year the benefit will be 10%. Then it will be actually cut down quite a lot less, won't it?
Yeah.
6% will be your benefit. So yeah, it's a tightening, but certainly not as bad as we thought.
The sort of the
headlines, talk of lining it with income tax and all those kind of things.
Sort of 40% of things weren't there. Obviously, another change that they've not followed through was the potential change for high income child benefit. So originally, I think there was an idea that as well as the limit going up to 60k, they were going to try and look at people's household rather than just the highest earner in a couple. But they've had to say they're sticking to the.
I think they realised that the actual reality of how you actually can do that is a nightmare. Our system is not geared up to provide
I think it was a lot
household
of
income.
I think a lot of things were to do with what classed as a household as well.
Yeah.
If you had somebody renting a room or something like that, were you suddenly going to be classed as a household? So I think they've realised that was just
You might have a lodger. You might have a lodger that, you know,
earns a lot more than.
Well, you might have a lodger, and then one day that lodger becomes more than a lodger.
Yeah.
And at what point do we say that that's happened? It was just going to be
I think
a logistical nightmare.
We're not sophisticated enough, were we? And then late payment interest. So people who don't pay the tax on time.
Yes, those naughty people that don't pay their tax on time. I'm sure none of our clients do that.
Interesting. That's now going to be 4% above base.
Yeah. So we've just had a base, as we sit and talk, we've just had another base rate cut. So the current rate is 7.25%, but then from the 6th of April, it will go up by 1.5%. To obviously that would then make it 8.75%.
I think the headline said 9% because of the time of the budget.
At the time, it was 9%.
There hadn't been the base rate cut, and obviously
the general rule of thumb at the moment is the interest rate is set at 2.5% above base. That increase, as Sarah mentioned, is going to be 4% above base.
I think that pretty much covers our points for individuals.
Yeah, there wasn't too much.
We're going to do a separate
really impacted
for inheritance tax, which does obviously have a lot of changes this time, but there'll be a separate video on that, so look out for that.
And indeed our other videos as well that have been on the budget.
Thank you.